And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for the MetaTrader 4, MetaTrader 5 platforms, and just in general, making more money trading and becoming a better trader, improving my skill set. And when I improve my skill set, I publish it here and then show you, and then you can become a better trader. So I got a lot of exciting news going on today. We have the BOE interest rate decision around 7 o'clock this morning, in about 40 minutes. And then we also have the Bank of Japan making their rate decision a little bit earlier or a little bit later. But they've already done something a little bit earlier today, which is kind of interesting. So with that, let's go ahead and get right into it. First, we're going to talk about how you can lose money, and which is not desirable. However, it is something that can happen and will happen if you trade for very long. So with that, let's go ahead and get into the risk disclosure because you need to know about these risks. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. The Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And I'm in the United States, so I think I need to say these things because I used to have NFA registration, and I used to have to weave this into all my sales scripts on all my pitches. So with that, let's go ahead and get into what is going on today. We've got a lot going on. I need to open up another couple more screens, by the way. Okay, there's one that's not a good address. We'll go ahead and go into here, so because I will forget, and then have to make the video all over again, and I don't have time to do that today. Okay, so here we go. We have that one up. We have this one up because something. I'll tell you why I had this one up in just a minute. I don't know what else. I'm going to go here. And yes, I do these all in one take, so there's not any surprises of any kind. Just gonna see what I do, which is fine. I'm looking for something. Something has happened in the last couple of minutes that kind of threw me off this morning. We had started setting up my trades for the yen, thinking I was going to come into the yen today, and then fortunately the price moved in the opposite direction before my trades went in, so I did not lose any money on it. However, I'm about 200 pips out on those right now, where I should not be. So I probably need to close those trades and start all over again. So we are now 100 pips out of the money on that one and 100 pips out of the money on that one. So we're going to close these since they're no longer valid and close these. No, I'm not losing money on these trades. I did not get them. They did not go in. I do not go in with market trades. I go in with market stops, buy or sell stops, or buy or sell limits. And then that way, if something goes wrong with the trade like it did today, I wouldn't lose a lot of money doing it. So that's just my strategy on trading. Take it or leave it. I'm going to go ahead and do this too. So sorry that we're doing a lot of behind the scenes stuff in front of you today, but you know, hey, that's the way it goes sometimes. And this one here, and that one there. And now we're ready. Okay, sorry about that. Oh well, let's go and get started now. Oh, I've been doing that lately. First, let's go into. Let's talk about me. Now that you see me set up, let's go ahead and do this. I haven't had a chance to get the that indicator up yesterday like I wanted, so I might get that up in the next couple of days. But I do have a free indicator coming out to show RSI FIBO pullback areas that automatically calculates where FIBO pullback areas are. So I've run some research and determined that it's a 10% pullback area and a 20% pullback area and a 30% pullback area after the 618 level. That's where 83% of all uh, uh, approaches to the pullback area take place, and then it goes from there. So with that, let's go ahead and take a look and see what we've got today. Here we have the Bollinger Band and RSI Mean Reversion Pro for MetaTrader 4. Here's the Bollinger Band and RSI Mean Reversion Pro for MetaTrader 5. And what these do is that they monitor trades that when they get outside of a 20 Bollinger Band period. And of course, you can change these adjustments and try and play with these EAs as you like. You can download them for free if you just do this and then go to free demo down here, which is the box that doesn't, you can't see as much, but you can download this for free. And as you can see, it does work. They do work. They don't trade as often as I'd like for them to, but they do work. So with that, let's go ahead and get into here, and you'll also see where I'm working on other things like the FIBO Trend Continuation EA, which is the one I'm working on. That is the FIBO, when you've got a FIBO pullback to 61.8% and then it takes off again, then you can do that manually, or you can have an automated free indicator I'm going to put out. Still haven't, it's lined up, ready to go. I'm going to need to do the final checks on it and then upload it. I'll probably do that Sunday. And then go from there. We also have tradingforexforprofit.com. This is my website. Highly recommend you check it out. Go ahead and start for free, or you can go ahead and start an account and then log in like this. And here is the accounts. Come over here to the accounts and it'll load up your accounts manually, and or you can once you start the account, I think it gives you the option to import your trades. So you can import your trades for your statement. Then that way it will list the different activities that you have, like deposit, withdrawal, payout, adjustment, fee, commission, swap, spread cost, blah blah blah. You can set up your journal here, which we're still want to add a couple of features to this, but you can add up, start with a plan trade, since the whole object here is to get you to plan your trades better and to even miss trades, to change that too. But you need a strategy first. So you come down here and check on your strategies, what strategies that you like, what strategies you don't like. For example, this one, no strategy, just an opportunity and jumped in to be avoided. So don't do that. That's my big things. I look at it and see the market's moving, and I jump in thinking that it's FOMO time. We don't need FOMO at all, so FOMO is not good. But check out the Trading Forex for Profit. It's my website. It's really good. Economic calendar. I'm still working on that. Still got a couple of glitches in the economic calendar. With that, we have. It hasn't changed. Interesting. So yesterday we had the Fed funds rate. That should have gone somewhere else by now. This morning we have German preliminary CPI. That should have updated, but didn't, which is the thorn on my side right now. BOE monetary policy report is right there. Monetary policy for Bank of England again. And then Bank of England Governor Bailey is going to speak. And then advanced GDP for the United States. That ought to be interesting. There may have been a sneak preview on that for advanced GDP. Unemployment claims and core PCE for comes out today also. So that'll be an indication of what kind of inflation we've got. The Fed's favorite policy making inflation for that, at least it was under what's his face, Jerome Powell. Then we have the Japanese monetary report and the Japanese outlook report, and they've already said they're cutting sales tax on food from 8% to 1%, and then they'll reinstate it next year. So that is an indication that the government is in trouble, to put it bluntly. So with that, let's go ahead and get into this. I want to check this real quick just to see if there are any new things that update faster than my site does. Right now, here's the big change right there that I was watching. So that's interesting. Gold perked up a little bit more. We don't see any immediate things, so we'll close that one out. All right, so let's go ahead and get into here. That is not what we're going to start off with. We're going to start off right here. And at Bitcoin, Bitcoin is where we start a lot. It's popular. People like it. people actually I don't think people like it anymore. Right now it's got a hard ceiling right there at 66.50, 66.5, and I don't see that changing anytime soon, although we do have kind of a bullish candle forming. A bullish, if I take this, maybe not that, take a horizontal ray, put it right about here, and then change that to a trend line about right there. Go from there to there. We do have a bit of a bullish pennant forming right there. Put it right there just so everybody can see it. You can kind of see it. Yeah, maybe not, but we do have kind of a bullish candle pennant forming right there, so we could be taking off soon. We'll certainly see about that. I'll leave that in there just for grins. Let's see. With that, let's go. I do not trade crypto, so I'm going to tell you that in advance. That's not my gig. We do have US 2-year bond yield right there at 4.26%, which is well, that's 2-year. I need a 10-year. Wrong one. Oops. Here we have the US 10-year is what we need. The 4.69%, which is not really the area we want it to be in. It's kind of high for us. We'll see what happens after, of course, PCE and GDP come out. We're going to look at something else real quick, too. Let's look at GDPNow from the Atlanta Fed. And let's see if we can get a preview of what's going on with GDP, the GDP number. So the GDP number is showing 1.6%. Growth right now. So that's what they're saying right now. The next update is July 28th. So the GDP forecast, the estimate for Q2. Okay, so that's basically said and done. Pretty much going to say that 1.6% is what they're saying to do. That's what we're doing with that. So we're looking for a number of 1.6% today. Let me see. I go back here and look at the public site. Let's see what's going on the public site. Oh yeah, I was looking at the public site. So let's go ahead and come down here, and that's news on the calendar right here. Okay, so that's why I didn't update, because it's waiting on me to update it. Okay, which we need to change because I don't have time to do that. So we're looking at a forecast of 4.1%. The Atlanta GDP is saying 1.6%. So we're looking at a possible collapse of that number. So that's not good. We could see a big downturn in pretty much everything. That's could be indicating the markets want a price increase. Sorry, want an interest rate decrease. Well, they want to see interest rates cut. You can't cut interest rates going into inflation. It's just not going to work. Then you're going to have runaway inflation like we did with what's his face, Biden, when Biden was in office, when he just pretty much opened the floodgates on monetary creation post-COVID. But with that, we don't want to see that. Let's look at MarketPulse too. MarketPulse is neutral right now because there's just too many things that everybody's waiting on, and so we're going to continue waiting. Okay, let's get back into this. US 10-year is a little bit jumpy at 4.696%. Not really what we're looking for. And then we'll look at the Japanese 10-year, which is up 1.5%, which is indicating a narrowing of the, you guessed it, the yen carry trade. So let's come down here and see what we're doing here. Open this in a new tab here, and let's see what we got. We have the pound versus the yen. It's not what we're looking for. Looking for the US 2-year and this 10-year. I said the 2-year and then the 10-year. There we go. We're seeing it narrowing a little bit more, but again, it's still not where we were during the dark times of COVID. We could see this come down and this go up. That would indicate that the carry trade could break down a little bit more, and that would bring the US dollar to the yen probably back down to around the 120 range. If that started breaking down, if not lower. So that's the reason why we watch this, to see if we can get an idea of when the carry trade is going to break apart. and that is going to say, as I mentioned, drive all the yen pairs lower. The pound versus the yen, dollar versus the yen, Aussie versus the yen, all of them, because the interest rates disparity. That's what big companies and governments are making money on right now. So with that, let's go ahead and get back over here and see what's next. What's next after that is the euro versus the pound. Euro versus the pound. Pound's starting to gain on the euro a little bit, so that could be a top for that. Could be a turnaround area for that. DXY is way down, 168. So we've got we could have peace breaking out also, which could have also caused that, cause dollar weakness. If peace breaks out too much in the, I hate to say that, if the U.S.-Iran conflict unwinds a lot more, then we will see dollar weakness. We'll see the dollar come back down to around 97-ish, and that would be completely change the forex situation. We'll see the dollar versus the euro versus the dollar go through the roof, probably back up in the 120 range. So 600 pips could be made there. Right now it's at 114.74. Big turnaround yesterday in that event. And here we have the pound versus the dollar, 133.90. Again, not necessarily what we're looking for. I mean, 133.90. It's right back up to the 134 range. Sorry about that. I spaced for a second. Big pullback in the after the rate decision yesterday. So the dollar versus the Swissy down 81.29. We have the dollar versus the yen down to 162.80. This is a drop that just took place from I was setting up my buys around 164.8 or 163.80, and then it came down basically 100 pips, almost 100 pips. The range on that is right now it's at 57 pips down. So we could see that come down more, or they are setting up for the Bank of Japan to not do anything, which I'm staying out of that market right now. I would love to get into it, but it is just not looking attractive. It's looking too jumpy to me. And you can get wiped out. You can wipe out your account with the yen pairs if you're not trading successfully, if you're not trading with a 1 to 2% risk and have your stop losses set, because it's literally anything goes. I've said all week that the BOJ is the wild card, and that is definitely true. You're not quite sure what's going to happen out of Japan right now. Euro versus the yen is also down. What is it? 58 pips. So, but did not enough to cover yesterday's gains. So that's interesting. Yet. CAD versus the yen, 115, down under 116. And then we have the Aussie versus the yen. So what would be really throw the monkey wrench in the world economy is that if Japan collapses and war continues in the U.S. and Iran, between the U.S. and Iran, that would be because it's going to drive up the price of oil, and that is what's putting the squeeze on Japan right now anyway, is the price of oil going up. The Aussie versus the yen is 113.58. Then we have NYMEX crude oil, which is my favorite gauge of crude oil. Other people like the WTI, but I like West Texas Index. I like the NYMEX. I don't know why. 84.23, which is up from yesterday's numbers. Excuse me. Here we have the UCAD, 140.45. Not a whole lot going on there. Still way off of the 142 number, but not a whole lot of activity going on right there. Aussie versus the dollar right there at 69.77, still under 70. Not getting into that anytime soon. Gold versus the dollar, 40.78. This is up finally, 1140. Palladium, platinum took over 1600 pretty handily yesterday. Palladium, 1282, right there, also a good time. Again, not a whole lot going on with the metals right now. Silver, still loving 58, the 55 to 59 range, it looks like. Let's get into the U.S. software sector for just a sec. U.S. software sector up marginally. However, look at these individual stocks. HubSpot up 5.49%. So something's going on here. However, that could be a head and shoulders pattern. We'll see what happens with that. Salesforce up 3.9%. Intuit up 6.43%. So they were cut to holds instead of buys, cut from buy to holds. So that improved the software sector output. So I don't know what's going on with that. That doesn't make any sense to me, but at any rate. Responsible governance, blah, 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 honest and ethical conduct. Okay, so GoDaddy at 105, not my favorite company to work with in the world. I've downgraded my exposure to my personal exposure as a developer to GoDaddy, but that's okay. Adobe up 5.272%. So yes, I've been paying my bill, so that looks like that's been paying off. Yay! I've been an Adobe customer for about 14 years. Upwork is up, down, sorry, 9.53% yesterday. We'll see if that continues today. Still don't have any update on your utility bill, on your electricity bill, but judging by that chart, it's definitely going up. We'll skip the one. By the way, this is the WTI index. The world. That's why I don't like it. I can't find a good chart on the WTI, so we may have to just do line charts instead of candles. Line that work out better. Yeah, it works out a little better. And it's right down here. No, it's way up here. 90. Okay, it's the purple one. A lot going on with that chart. At any rate, we won't look at that one any much more. Magnificent 7. Down 1.39% across the board. Let's get back into candlesticks. Candles. Down 1.39% yesterday, so not a whole lot of money raising going on. Google, 0.9%. Amazon, down 1.8%. Apple is a bloody day on Wall Street yesterday for stocks. Apple down 1.8%. Still just after that run, it's not really anything bad going on there. Facebook, Meta off 7.8%. Microsoft off 2.8%. Nvidia off, I'm sorry, $7. 0.7%, 1.30%, 3.55% off for Nvidia. And Tesla down 2.9%. SpaceX. SpaceX off 3.32%. So a good thing they had a good company built before they issued the stock. I think that was a stroke of genius on because it's without it being a profitable company, it's still not going to be going anywhere anytime soon. But that is really all I've got for today. We looked at MarketPulse. We looked at my work on expert advisors. Yes, I think we covered everything. So with that, that's all I've got today. If you like this video, then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And if you, what else? Oh yeah, if you want to talk to me directly, hit me up in the comments section and I'll get back with you as soon as I can. So you guys have a great one. Talk to you later. Bye.